Well, there are some big changes in your tax filings this year that you need to know before filing your taxes for the financial year 2024-25. First up, the new tax slabs under the revised new tax regime. The basic exemption limit has gone up from 2.5 lakh rupees annually to 3 lakh rupees annually, so no tax for incomes below that. Tax rates have also changed, so 3.3 to 7 lakh rupees is taxed at 5%, 7 to 10 lakh rupees is taxed at 10%, 10 to 12 at 15%, and 12 to 15 lakh at 20%, and over 15 lakhs remains at 30%. These adjustments aim to reduce the tax burden, especially for lower and middle income groups. Next, there is a major update on capital gain taxes. Short-term capital gains, or the STCG tax on equities, are now taxed at 20%, up from the earlier 15%. Long-term capital gains, the LTCG, are taxed at flat 12.5%, but the exemption limit has increased from 1 lakh annually to 1.25 lakh rupees annually. Additionally, the holding period for assets to qualify as long-term is simpler now, 12 months for all listed securities and 24 months for all other assets, replacing the old 36-month rule. For those contributing to the National Pension Scheme, the NPS, through their employer, the deduction limit for employer contribution has increased from 10% to 14% of basic salary. That's more saving for retirement. Salaried employees also benefit from a new TDS-TCS credit system. You can now claim credit for tax deducted or collected at source on other incomes and expenses, ensuring more accurate tax deductions on your salary. Finally, a heads up for luxury shoppers: a higher TCS rate applies to purchases over 10 lakh rupees, making high-end buys more expensive. Keep these updates in mind while you prepare yourself for filing ITR for 2025 and plan ahead for maximum tax savings.